inflation is here. It is a major problem, and that's exactly what many of us who have been buying precious metals were expecting all along. And what's very frustrating is now that we've been proven right, we bet on inflation. We bet on inflation by buying gold and silver. We bet right. All the people that said there was no inflation to worry about, they were wrong. Yet it's very frustrating that even though we were right, we're not getting rewarded for being right in the price of our gold and silver that should be much higher. Well, first of all, let me start out by saying inflation isn't new. Just because a lot of people are finally talking about inflation, that doesn't mean that inflation has suddenly appeared and it was missing in action all this time. Inflation has been with us for over a decade. I mean, it's been with us for many decades, but in particular, starting with the 2008 financial crisis, when the Federal Reserve responded to that crisis with quantitative easing, that was inflation. So we've been experiencing inflation under the guise of quantitative easing, because quantitative easing is simply a euphemism for inflation. The government didn't want to admit that its policy response to the Great Recession was to create inflation, so it named inflation quantitative easing, which sounded like it was a good thing or a smart thing. It was a way to dress up a really bad thing. Now, what happened early on with inflation, and the reason that nobody really cared about it, was the way the inflation entered our economy and the financial system. The greatest impact was on financial assets. Stock prices went up, bond prices went up, real estate prices went up, a lot of asset prices went up, and when that happened, a lot of Americans who owned those assets felt richer, and therefore they weren't upset that the cost of living was also going up because their wealth was going up a lot faster, at least on paper. But also the government was lying to the public about how much the cost of living was going up because it was reporting the increase through the CPI, and the way the CPI has been engineered, it really disguises a lot of the price increases, and so the public didn't realize how much prices were rising. I mean, they probably felt it, but they didn't see any official confirmation, and certainly investors didn't get that confirmation. They were looking at the CPI and they assumed that inflation was under control when beneath the surface it was actually breaking out. But the question that everybody is asking is, why isn't the price of gold and silver reacting to all this inflation? After all, at times it feels like the price of everything is going up, going way up, except gold and silver, which doesn't make sense, because gold and silver should be particularly sensitive not only to today's inflation, but to tomorrow's inflation, because gold is here forever. And so what gold can do is take all of the future expectations of inflation and represent them today in today's price of gold. Gold can discount all that future inflation. And that is the problem, because even though we have a lot of inflation today, investors still think we won't have inflation tomorrow. That is the real key. Yes, we have a lot of inflation, but investors are still not worried about inflation. Why? Because the Federal Reserve is promising to solve the problem. The Federal Reserve is telling the markets that inflation is going to go away, that the Federal Reserve has the tools to put this genie right back in the bottle before it does any real damage. And so don't worry, Jerome Powell and all his comrades are on the job, and they're going to make sure that inflation comes right back down to 2%. So don't worry about it. You don't need to go out and buy some gold and silver to hedge yourself against future inflation, because there won't be any, because the Fed's going to get rid of it. But before that happens, I think it's important that people, A, not give up on the gold and silver that they already own. Don't think, oh, it's not working out, so I need to sell my gold and silver. That would be the worst thing that you could do. But what you should do is recognize the opportunity to continue to buy more, while so many other investors are clueless as to what is actually going on with inflation. That is the opportunity. And when gold and silver prices start to move, I think they're going to move up in a spectacular fashion. I think we're going to see major moves. You're going to see gold moving up, not just $50 in a day, but $100 in a day, $200 a day. We can see silver start to move $1 at a time, $2 at a time, maybe $5 moves. I think when these big moves really start, a lot of people are going to be too afraid to buy. They're going to be worried that they're going to buy a peak and that it's going to pull back. It's going to be difficult to buy into that hot of a market. The time to buy is now. Before that happens, before everybody figures this out and starts rushing in to buy gold and silver, you can buy now while they're still giving these metals away, because they still don't believe inflation is a problem. Well, just like they thought it was transitory, they're about to find out that it's permanent, that it's not going to go away based on Fed policy. And in fact, even if you look at what Powell is promising to do to fight inflation, he's only talking about raising interest rates to maybe 2.5%, 3%. Inflation is 8%. Even if you believe the government numbers, if you don't, if you use real numbers, it's at least double that. How can you fight 8% inflation, let alone 15 or 16% inflation with a 2%, 3% interest rates? In fact, the economy collapsed in the fourth quarter of 2018 when the Fed raised rates up to about 2.5%. We didn't have anywhere near the debt then that we have now, and inflation was still under 2% the way it's officially measured. So how could the Fed get rid of inflation now with interest rates that low? In fact, years ago, a 2 or 3% interest rate would have been considered stimulative. How are you going to use a rate that is historically stimulative to fight historically high inflation? That's what people still don't understand, that everything the Fed is talking about doing is inadequate for the job that they want to do. If the Fed really wanted to fight inflation, interest rates would have to go much higher. We'd have to have positive real interest rates like we had in 1980 when Paul Volcker put interest rates up at 20% when the CPI was no higher than 13.5%, and that was an honest CPI, unlike the CPI we have today. There is no way the Fed could actually do what it takes to fight inflation now, so all it can do is talk about fighting inflation, but what it's talking about doing is inadequate. But while these rate hikes are not nearly enough to fight inflation, they are enough to prick the bubble in the economy. They are enough to cause stocks to go into a bear market. In fact, they are enough to create a financial crisis, because we have so much debt that these higher rates may not be high enough to fight inflation, but they're too high for the debtors to be able to afford to service their debt. And the biggest problem with an inflation fight is all the money the government is going to have to print, or the Federal Reserve is going to have to print, to finance the exploding deficits in the next recession. I mean, they're already $3 trillion approximately, and we're not even in recession, at least officially. We still have low unemployment, but when we go into the next recession, or this recession gets worse, the Federal Reserve is likely to crank up those printing presses to pay for all the government stimulus.